Good morning, everyone. This is Brad Matheny. Today is the 2nd of June. This is a carryover of my Mechanics of Trading Part 4. In fact, let me add this here. This is, and what we're really going to be talking about here is A, success versus B, failure. And this is the ultimate game plan for your trading. Ultimately, you have to begin to understand that trading decisions are marked as success or failure of market trends. Okay. It basically comes down to everything that I teach you is all about determining success or failure related to your understanding of the market. So I had drawn this chart on the Dow Jones highlighting the rotation in the market from 1929, particularly from 1943 onward, the end of the war. And I did this for a video to my members, subscribers, that were related to the ongoing upward trend. And what happened after the war? Global tensions ended, soldiers came back, we started rebuilding society, rebuilding Japan, rebuilding Germany and Europe, and we ended up having a great growth period, as you can see here from these fans that I drew going forward, related to the actual market growth. What happened here is we went through 1929 crash. We went through a number of years, 10, 20 years of sideways growth, sideways support, let's call it. And then all of a sudden we moved into this growth phase. Well, what this growth phase was all about was an influx of people, a rebuilding of global economy, essentially growth in GDP, growth in industry, growth in technology, and growth in earnings and opportunity going forward. But you can see as we move forward through these charts how price moved into and through these channels in the 1970s. And there were a number of moderate little events over here that we can play out, particularly this one, which was the end of the Fed right here, roughly 71, 72, 73. We'll highlight that as the end of, when I say the Fed, the gold standard. But as you can see, we moved then into a technology boom. In 1980s, early 80s, we moved into a technology boom. And that set up another series of angles that we worked with. And as we continued to move forward, you see that we got into the dot-com bubble boom, which set up another explosive growth phase. Then we ran into the 2000 crisis, which brought us back down, and the 2007, 8, 9 crisis, which brought us back down into these lower levels. Still quite bullish. Yeah, you can call these crashes, but still quite bullish in the trend. But then after we got done with the global post-global financial crisis credit expansion, the Fed kept rates very, very low, and we entered into this new expanded trend, which is I drew new GAN fan angles related to price moving forward. And you can see from the COVID lows, which I drew eventually, which we would have originally started off back here from these lows, you can see how we held up throughout these angles all the way solidly. Then I drew this. I drew this angle here off of the COVID lows. And the purpose behind this was a brand new, this was COVID right here, brand new zero interest growth phase for the markets. Now, of course, we've raised interest rates through this area, but we have a ton of money. We're still working through a phase where we have excess money supply, excess global credit, excess expectations carrying on, and the Fed is trying to dissipate money supply throughout the world. But now we're in this new channel moving higher. So now you can see I've drawn all these lines with the deep pullbacks and the rotations. And this is a conversation about if we were to get a pullback from these levels, understand where would we be? We're in the upper channel from back here. So let's go back to this area. There we go. We're in the upper channel from the 2009 base right here. You can see this red line, this green line. We're above it. Okay, we can draw a line here which looks like it was actually from, I originally started out here. This being an upper channel growth phase here. We're stalling up near this area. But if we were to stall here, where would we go? We would go likely down into this blue purple area here before we found some sort of an upward price trend. And then now understand that I believe that as we're moving through these cycles, we're actually looking at the potential of, we've cleared these cycles. These go all the way back almost 70 to 100 years back almost, 70 to 90 years back. And now we're in this massive growth phase. And now we have this, what I call the digital assets cycle phase. And I think this is going to be the next major move for the markets. And I believe that's going to put us into an area where the Dow Jones moves and the major markets move maybe through cycles, maybe through some consolidation here into the election, and then rallies considerably up into this channel, up into here. Now, maybe not quite like that deep move, but something like that. Okay. And I believe that we're looking at a very strong, so let me try to redraw this again. So we could consolidate into here, into the election, sideways, but eventually we're going to move up, up, up into this area, $75,000, $80,000 on the Dow Jones, and it's going to just, it's going to be an incredible rally. So the point behind this was when you hear all these people through the next 7 years scream crash, 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 be prepared for the idea that we're going to be looking at really the concept of this A-B mechanics. Okay, so now let's take a look at the mechanics of on the market and really start determining what A-B failure, success, and failure looks like. So we're going to come back over here. We're going to go to a blank chart on DDM, which is the Ultra Dow 30, and we're going to start taking a look at this from a standpoint of monthly data. Why monthly? Because monthly is critical to understanding longer term data. So we've had the COVID pullback here. We've seen the big rally. We've seen the downward trend. And now we're going to see this move higher. First thing we want to understand is that we have established a new ultimate high level coming across here. That gives us an indication that we're in an uptrend. Okay, so very simply, we are in an uptrend right here. Okay, we had an ultimate low level down here off of COVID, and that level has not been breached. We then had a new ultimate low set up here. Now, what is a new ultimate low versus a standout low? This is all part of the videos I've done earlier, but a unique low can turn into an ultimate low. So there's 3 different types of ultimate or types of highs and lows. There's a standout high or low. There is a unique high or low. And then there is also a ultimate high or low. Okay. And now, what is an ultimate? That is the last line of defense we have in terms of determining price trending. This is our get below this. There's nothing you can say, but we're in a downtrend. It's bearish. Get above this. There's nothing you can say, but we're bullish. And that's the same thing as we continue to move higher in price. You'll see ultimate highs get broken. We end up in a bullish trend. Okay. And no matter what happens, we are in a bullish trend at this point until we establish a new ultimate low and it gets broken. So now understand as we break down here, this has got to be an ultimate low 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Doesn't quite qualify. So it's got to be a unique low, has got to be a low that has not been touched in the last 15 to 20 bars. This one may qualify. I'm going to do a count real quick. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. That does qualify as a new unique low, which is ultimately an ultimate low. Okay, so we're going to go ahead and draw this as a unique low, and it takes over from this previous unique low down here. Now, at this point, because we have this deep, deep low here and this deep low here, I would still qualify this as an intermediate level low. The reason being is that this is a very substantial low off of COVID, and we would ultimately have to see the markets move from what's called an impulse move into some sort of extended trending move. So understand that the way the markets move is you get, you're coming down and you get an impulse move, then you get a correction, then you get some sort of a trending move. These impulse moves can be fake outs. So you have to be very cautious about it. And what you really want to try to do is establish some sort of a move like this, where ultimately the breakout has to be above some previous ultimate high or ultimate low level. So again, my concern would be that we are looking at this rotation, this sideways rotation. We've got bullish trending here. We come down, get a unique low here, which sets up an ultimate low movement up into this area. I would say that if we got below this area, we would be short term, intermediate term bearish, indicating that we could come down and threaten this massive, major, ultimate low. And that would be a very big concern. But if we fail at this level, then we're going to come back up and try to take out this. So let me explain again success and failure. At this point, when we get the breakout, success is we move up and establish a new high or low level. Failure is we get immediate rejection, move down, and take out a previous standout or unique low. So now, when we go through success or failure, you have to understand the A B structure here is that plan A is we're going to see success and we're going to protect the last standout low, which is right here. This is our last standout low. I'll draw this in a light blue color. So we're going to protect that low. It's a standout low. It has been touched in the last 3 or 4 bars, so it does not qualify as unique or an ultimate high or low. This breakout bar means we're going to, success would be higher and that we would protect this level. B, or failure would mean it fails, it rejects, come down and breaks out below this level. This would then put us into potential downward trending right here on an intermediate basis. And that would be a warning that we are likely to see the price come back down here to this ultimate low and attempt to find support. So same thing applies to when we reach this level here. Failure to get above this level, let me try it again so you can understand. Failure to get above this level when we get this rotation and we ultimately get a downward price trend here, failure to move above this level means that we have to move down in this area to try to find some level of support. So this whole move here, we would want success to continue to move here. Okay, that would be the success side, the A. Failure would be this side down here, moving downward right there. Okay, so now downward is what happened here. We get rotation here. Let's take a look at the Fibonacci rotation. So again, using very simple tools, I can teach you that ultimate support is determined right here. What I call ultimate support is between the 382 and 50 area. What happened here during this rotation, you see we come down, we find support, we get below it. Okay, very concerning. Now we go back to our AB standard. Oh, it's not even recording. Oh, it is back over here. Hopefully this is still recording. We'll find out. If it is, great, and I'll just continue. So this again sets up our AB structure, which is here. Success would be downward trending, breaking lower, looking for a downward price trend. Failure would be moving up, rejecting off of this area, and then eventually attempting to take out this standout or unique ultimate high right up here. So again, we have a rotation in trend that sets up our AB. What happened here was we had this lower low, this became an anchor bar. This is a very solid downward trend, sets up a unique low, sets up an ultimate low. But what happens the following month is we get completely rejected. Okay, we get completely rejected the following week. Now we're into B. Now we're into B moving. And B is failure. B means we move back into an upward trend. B meaning failure to move downward. We now have this ultimate low, which acts as protection right here, acts as protection to the downside. And now we need to see it move higher. So what we would do is we would take and draw a Fibonacci retracement from this level to this level. And we would look for the 382 to 50 level, which is right here, to act as a major resistance support area. And as you can see here, before I run out of time, you can see that we ran into it, stalled right through this level, acting as primary resistance. You can see here we have primary support right here, primary resistance right here. Very simple to figure it out. And as we start to see support holding, resistance is weakening. We're getting above it, but stalling. Eventually, you get this solid breakout move. We get an anchor bar here. We rally back up through it, and now we're up near new all-time highs, rolling around this level right here. So remember, everything is an A-B setup. Everything is either success or failure. Okay, as a trader, that's how you have to think about things. It's either going to do A, which is what I expect it to do, or it's going to do B, which is then fail. And what is my plan for a failure? So right now we have a new break of a new all-time high, which sets up a potential unique high right over here, which is a floating unique high, which will ultimately become our ultimate high eventually. But right now it's just floating because we need to see how high it's going to go before it sets up a decent pullback. Remember, an ultimate high or low must confirm by a rotation or downward pullback. So we don't know. We know this is a new high. We know that it's broken above this level and rallied all the way up. But we don't know this is an ultimate peak until we get some sort of downward rotation that confirms it. So understand that we're not going to get any confirmation in this area until it rallies up and rolls down substantially enough to confirm this is an ultimate high. But again, we do have confirmation here that this is an ultimate low. So this becomes our ultimate low. Can't get to it. But this red line becomes our ultimate low here. Bring to front. And this previous ultimate low is still valid. I still keep them here as we move forward, but it is still valid. And same thing with this area, this low back in here. There it is. Make this a 4 and try to extend this out. This high level becomes critical to me as a future line of defense for price trending. You can see how it was right in between the support and resistance area. These typically end up being very strong defense lines for price. So again, the point behind what I'm trying to teach you here is always have an A-B mentality as part of your trading. What to do if it's successful, what to do if it fails. Okay? All right, running out of time. Let's see if this works.